All right, let's get right into it. Welcome to your Executive Explainer on the polypropylene outlook for late July 2026. If you're managing supply chains or overseeing procurement, you already know how incredibly fast these numbers can move. Today, we're going to unpack the absolute latest global and domestic bazaar movements so you can strategically navigate this market like a pro.
Here is our roadmap for today. We're looking at global polymer bazaar trends, checking out some AI chatbot instant updates, diving into the Indian domestic market analysis, and wrapping it all up with some strategic procurement advice.
Starting things off with Section 1, Global Polymer Bazaar Trends, Tracking the Hubs.
So to really grasp local pricing, we have to map out the global landscape first, right? Because international volatility is basically the engine for our own domestic market pressures. And looking at the major global hubs right now, wow, it is a completely fractured market. There is no unified trend here at all. Over in the US, the market has actually softened. Export demand has slowed down. And when you mix that with some production hiccups at a major plant, bazaar prices for both homopolymer and copolymer grades actually took a dip. But cross the Atlantic to Europe, and it's a totally different story. Prices there have edged higher. We saw a quick uptick in buying interest just because folks are getting nervous about US-Iran geopolitical tensions. And the crazy part, this is happening even though spot supplies in Northwest Europe are still totally available.
And that contrast gets even sharper when we look east. In Turkey, overseas supply has tightened up because select international suppliers are actually pulling back on their volume allocations. But local buying is pretty quiet, so the results are super mixed. Homopolymer slipped a little bit, while copolymer saw some slight gains. Then, you've got China. China's wrestling with escalating crude oil and feedstock costs, literally pushing their production expenses through the roof. But, thanks to seasonal softness, downstream buying is just crawling. Buyers are out there aggressively hunting for cheaper cargoes, which is keeping spot prices stubbornly anchored right around 9,250 RMB per metric ton.
Moving on to Section 2, AI chatbot instant updates, getting intelligence on demand.
Okay, before we pivot to the Indian domestic market, let's talk about how the industry is adapting to these massive global shifts. In a volatile market, delayed info is basically useless info, right? Well, Polymer Bazaar has set up this incredibly slick system. You literally just send a WhatsApp message to their AI-powered chatbot, and in 5 seconds flat, you get instant PP predictions and updates sent right to your phone. It's on-demand intelligence, so you're never stuck making big moves based on yesterday's news.
All right, on to Section 3, Indian Domestic Market Analysis, Checking the Pricing Pulse. Now let's zoom in on the Indian bazaar, where those global ripples we just talked about are turning into massive waves for local processors. These figures go straight to the bottom line. Effective July 23, 2026, primary domestic producers hit the market with a really sharp upward revision. We're talking a 2.5 rupee per kg hike for homopolymer grades and a massive 3.5 rupee per kg jump for polypolymer and random polypolymer grades. Interestingly though, while domestic rates jumped, the deemed export prices didn't budge at all. They just rolled over.
So, what is this doing to overall market sentiment? Well, the bazaar pulse is hyperactive right now. It's basically a chain reaction. Rising crude oil prices are fueling these strong expectations of higher feedstock costs, which has everyone holding their breath for even more ex-works price hikes from producers. And what happens when buyers think prices are about to skyrocket? Panic buying, of course. Processors are scrambling to buy at current levels just to cover their immediate needs before the next hike hits. This frenzy has actually sparked a moderate demand recovery. And because of this sudden rush, local retailers are even managing to snag slight premiums on specific, tight supply grades.
And if you were hoping for some relief from overseas, well, don't hold your breath. Import offers are firming up at significantly higher levels. We're hearing PP raffia is hovering right around $1,180 per metric ton CIF Navasheva for mid-August 26 shipments, so buyers are getting squeezed from both domestic producers and import channels at the exact same time.
Which brings us to Section 4, Strategic Procurement Advice, our executive opinion.
So what does this perfect storm of global volatility and domestic price hikes actually mean for your buying strategy right now? The bottom line recommendation from the report is crystal clear. Procure your required volumes at current bazaar rates. Look, with the ongoing crude and feedstock volatility we've mapped out today, production expenses are absolutely expected to stay elevated. That gives domestic producers all the ammunition they need to push through even more ex-factory price hikes in the very near term. The window to buy at these levels is closing fast. Secure what you need immediately before those expected cost increases become your reality.
If you want to dive into the comprehensive PDF report with all the granular data, just head over to the website on your screen. And if you need direct buying and selling leads, hit up the relationship manager at that number too. As we wrap up this explainer, I really want you to take a hard look at everything we just went over. From the shifting global hubs to those aggressive domestic price hikes, with literally all signs pointing upward, ask yourself, is your supply chain truly prepared for the massive volatility coming this August?